Hi, and welcome to Web3 Unfiltered. This is a podcast where we examine the systems, incentives, and infrastructure shaping the future of technology, finance, and decentralized networks. I am your host, Collins Victory Dabi. Today, we live in an era where technology evolves faster than our ability to understand its long term consequences. Artificial intelligence is transforming decision making. Bitcoin continues to challenge conventional ideas about money, and governments are spending billions on ambitious technology programs with wildly different outcomes. Yet beneath these seemingly separate stories lies a common thread: systems, the incentives they create, the people who operate them, and the assumptions they quietly reward or punish. To discuss this today with us, I am joined by Alberto Artasanchez. He is a data scientist, entrepreneur, solutions architect, and author whose career spans more than 3 decades across artificial intelligence, cloud computing, finance and investing, and real estate also. So whether writing about Bitcoin, AI, Elon Musk's business ecosystem, or why billion-dollar public projects fail, Alberto approaches every subject from the same perspective: understand the system before believing the story. So today we'll be exploring what AI can and cannot do for investors, why Bitcoin demands a different way of thinking, what repeated institutional failures teach us about incentives, execution, and the limits of technology. Alberto, welcome to Web3 Unfiltered. How are you doing today?
I'm doing great, Collins. Thank you for having me. I'm really looking forward to this.
Yeah, thanks for joining me on the show. And yeah, it's a really great pleasure to have you here. So, Alberto, what strikes me about your career is that you've never stayed with a single discipline. You've built companies, you've worked in artificial intelligence, cloud architecture, investing, and real estate, and then written about everything from Bitcoin to why government mega projects fail. On the surface, those seem like completely different worlds, but reading through your work, I kept noticing the same thread running through all of them. You're less interested in the technology itself than in the systems behind it. The incentives, the feedback loops, the behaviors that determine whether something succeeds or quietly falls apart. Now, I think that's the right place to begin because it frames everything else that we're going to discuss today. So, your career has taken you through AI, finance, cloud computing, entrepreneurship, and real estate, like I said earlier. And looking back over those experiences, what's the one lesson that keeps reappearing whenever people mistake hype for genuine opportunity?
Yeah, that's a good observation, Collins. I have been jumping, throughout many industries, right? Like a part of it is the industry telling me, or the business cycle telling me that it was time to move on. I do have to admit that sometimes I do get bored with certain things, right? And sometimes I was at fault for not sticking with something, right? But for the most part, it has been the business cycle telling me that it was time to move on. I can give you a quick example. For example, in real estate, we had a pretty nice little portfolio, my wife and I, and we did pretty good with it. We already exited all of it. I was thinking that I was going to be able to make money through the cash flow, right? Like whenever you buy real estate, be it in the US, in Mexico, in Nigeria, wherever you buy it, you want to make sure that the real estate pays for itself, right? So every single property that we bought did provide a little bit of cash flow, but not to the point that you could live off of that, right? It was enough to pay for itself, and then a little bit of like money coming out. When we bought the properties, we eventually put it into what's called a portfolio mortgage, which means that you have all your properties under a single mortgage. And when we did that, we got a really, really good rate. I don't know what the rates are where you are, but we got it for like a rate of 3% a year, which allowed us to not pay a lot of interest. But in the US, rates reset every 5 years. So when it was time to get the mortgage again, to do the paperwork again, the rate was going to be 7%, which means that our payment for interest was going to jump more than double, right? So in that case, the bank, right, very clearly told me, hey, your interest is going to go up. Do you want to keep going or do you want to come out, right? So in this case, my wife and I decided to sell all the properties. We made a really nice profit when we sold everything. We were able to pay off the bank, and the market kind of told us that it was time to move, right? The other thing that happened in this particular example is, again, I don't know what it is in Nigeria, but in the US, certain towns started putting rent controls, and that also was a bad omen, right? It's great for tenant when your rent is controlled or your rent is frozen, but it's bad for landlords, right? So we decided to leave the market. But yeah, I mean, I can tell you every single time, you know, how I exited, whether it was like the market telling me to exit or not. But you're right, I have been jumping throughout my career. Something to be said for sticking around with certain things, right? But you to have a focus and to be very, very disciplined in your focus. But also you have to be smart enough to know when it's time to jump and bail and go to the next thing. Thank you for the question, Collins.
Amazing. So one needs to know how to focus, and one needs to also know how to jump onto the very next thing, know when it's time to leave something and go on to the next. That's really interesting. And one thing stood out from what you just described, and I could interpret it to say that it's not like technology itself really seems to be the deciding factor. It's how people use it or misuse it. And let's take AI for example. Some people now treat it almost like an investment advisor, while others dismiss it as little more than an advanced chatbot. Now, both extremes seem to miss the point. So, as someone who builds AI systems rather than simply talks about them, where does AI genuinely improve investment decisions, and where do you think it creates a false sense of confidence?
Yeah, that's a great question. Let me start by saying that I do believe that AI, especially in its current form, right, it's the most powerful, most incredible, I cannot put enough superlatives on this, right? Most dangerous technology that humankind has come up with, right? So, and you're right, it really depends on how you use it and what questions you ask it, what prompts you give it, what programs you write with it. That's really going to determine if you're going to be successful with it or not. I can tell you one of the ways that I'm using it, and that's pretty much my current day job. I use Cloud Code to generate algorithms for trading, right? So it's not, it goes beyond just asking AI, hey, should I buy Microsoft or should I buy Apple or should I buy this or that, right? It's trying to identify edges in the market by using AI and then creating algorithms to exploit those edges, right? So you really have to get deep into the finance, deep into the AI, how it can help you. And by the way, however you're using it right now, it's probably going to change in the next 3 months, 6 months, for sure in a year, right? So what we're seeing right now is Wayne Gretzky was a great hockey player because he was able to go to where the puck was going to be, right? So not only do we have to be mindful and learn how to use AI right now, but we have to realize where it's going to go in the next couple of years, right? So yeah, that's how I've been using it lately, Collins, but to create algorithms to identify edges and to exploit those edges. But yeah, you can really use it for anything you want, right? It's amazing how powerful it has become, and you can use it for good or for bad, right? Atomic power is a good example, right? It can be used to create a nuclear bomb, or it could be used to create nuclear energy, right? And one is an amazing thing, one is very beneficial, the other one is a horrible weapon, right? But I think AI is 10 times more powerful than atomic energy or the atomic bomb. So it's going to be interesting to see how this evolves in the next, I would say, months, maybe years, definitely not decades, right? This is something that's coming very, very soon to everywhere throughout the world, Collins.
Yeah, that is very correct. AI seems to be improving every single day, not even month. What we are used to right now, by the weekend, it might be something entirely different. It might be something more advanced, 10 times better than what we used to right now. And yeah, Alberto, you've drawn a clear line between using AI to, I would say, improve judgment and expecting it to replace judgment altogether. Bitcoin seems to expose that same tension. Plenty of intelligent investors understand the technology, they read the white papers, they follow the market, and they still make emotional decisions that undermine their long-term goals. So perhaps the biggest challenge isn't understanding Bitcoin, it's understanding ourselves. Now, you've argued that Bitcoin is a decades-long game rather than a day trade. So, what mindset separates people who build lasting wealth with Bitcoin from those who constantly get caught in market cycles?
Yeah, that's another good one, Collins. So I do believe, similar to what AI is, I do believe that the invention of Bitcoin is on par with one of the biggest inventions that have occurred in our lifetime, right? Like, the interesting thing about Bitcoin is, in contrast to AI, which keeps on changing, evolving, new programs, ChatGPT and OpenAI and Anthropic, and now the Chinese models, right? Like, they just keep on like one-upping each other, right? Bitcoin is kind of the opposite, right? Like, Bitcoin code has changed very, very minimally, right? It's been in existence for 16 years, and the underlying code that powers Bitcoin has changed very, very little, right? The network that supports it has grown exponentially, right? The energy that is used to power Bitcoin has grown exponentially. But if you look at the actual code, it has changed very, very little, right? And the reason that it's important, and it's almost like complementary to AI, is because it allows us to, in a very powerful, in a very mathematical, in a very sure way, in a very energetic way, to determine what value is, right? People often say, oh, Bitcoin is not backed by anything, right? I disagree. What Bitcoin is backed by is energy, right? And energy is one of the few things, maybe the only thing, that cannot be faked, right? So Nigeria can print more of its coins. Mexico can print more of its coins. The U.S. can print more dollars, right? Even gold, right? We can always mine more gold. Companies can issue more stock, right? But the way that Bitcoin is set up, there will never be more than 21 million, not billion, million Bitcoins. And that is validated by the energy that powers the Bitcoin network, right? So if you wanted to like replicate or hack or kind of create another Bitcoin network, you would have to, it would have to be a network that uses the same amount of energy, that has the same length of its blockchain, that replicates what the Bitcoin network is, and actually makes it more real than Bitcoin, right? So that's why Bitcoin is so difficult to copy and replicate. People immediately know when when a Bitcoin node joins a network, they immediately know which is the real Bitcoin, because they just go where the most energy is, where the most nodes are, where the most history occurs, right? Like whoever has the longest blockchain, the longest chain, is the chain, and that chain has been created by the energy that runs it, not just right now, right? But the energy that has ran it since the inception of Bitcoin. So yeah, it's going to be interesting to see how it evolves. One last thing that I will say about that, right, is that I do believe that Bitcoin, not crypto, right, because there's a lot of cryptos, and there's a lot of cryptos that get created every day, and but Bitcoin has been the dominant player, right? Like, they have like 60, depending on when you count, 60 to 70% of the market, of the crypto market, is Bitcoin. I don't think anybody's really going to catch them. I don't think anybody's going to have the amount of energy that Bitcoin is sucking in, and the amount of mind power that it's taking on. So I think Bitcoin will be the lingua franca of the AI generation, right? And when transactions occur between AI agents, it will be Bitcoin that's used among those agents to transact and to sell among themselves.
And yeah, and you know what's interesting about your answer is that in as much as you talked about Bitcoin a lot, it's not really about Bitcoin at all. It's about the incentives, the patience and decision making under the uncertainty. Those same themes appear again in your work on government programs where enormous budgets and talented people still produce disappointing results. Now that suggests these failures have less to do with individual competence and more to do with how large systems behave. So, Alberto, you've written about the US government's $42 billion rural broadband program as an example of good intentions producing bad outcomes. So, what does that course teach us about designing large-scale systems, and are there lessons that builders in Web3 should pay attention to?
Yeah, that's good, Collins. That's a good catch. That's a good insight into some of the books that I have written. Right. One of my favorite phrases is incentives drives behavior. Right, and it could be whatever you're trying to incentivize. You're trying to get people to have kids. You're trying to get people to not have kids. You're trying to have people start businesses. You're trying to get people to get off welfare, to get on welfare, right? So whatever your incentive is, it's going to drive that behavior, right? So one of the examples that I can give you is in the book that I wrote for the series Smoke and Mirrors, talking about the train to nowhere in California. The incentive that we usually get when they have this ballot initiatives to decide, hey, do you want to vote on this? You want to vote on that? It's not necessarily the initiatives that get passed, the initiatives that get approved, is not the initiatives that are going to complete. It's not the initiatives that have the highest likelihood of succeeding. It's the initiatives that sound the best. It's the initiatives that promise us the most, right? And as humans, we need to be a little bit more cognizant of what it is that they're offering and look behind the wall, right? Look behind the curtain. So in the case of the train in California, from the get-go, that initiative was never going to fail. It was never going to succeed, right? It was destined to fail. The reason I say that is when they passed the initiative, which was in 2016, and it was passed during the time of when Arnold Schwarzenegger was the governor, right? So this has nothing to do with conservative and liberal, Republican or Democrat, right? Schwarzenegger was a Republican, but when they passed the initiative, they said that the train was going to cost $30 billion, but they didn't request a bond for $30 billion from Californians. They didn't say, hey, give us $30 billion and we'll build it. What they did is give us a bond, approve a bond for $10 billion, and we'll get the money somewhere else, right? And the money, the somewhere else money was two places. One is from the federal government, the U.S. federal government, and two from private investors. Another promise that they made when the bond was going to get passed was that train was going to be affordable. It was going to be $50. And the third promise that they made was that it was never going to need a subsidy, an extra subsidy, once it was up and running. So these are all like phenomenal promises. These are great incentives, right? Like, why wouldn't I do that? Like, I'm not going to have to pay any extra money once the train is built. It's going to be cheap. I'm not going to have to pay for the whole thing. What a wonderful thing, right? Well, built into that incentive was the fact that you got to look at the behavior that's going to happen from the private industry. If you know that a train is getting built where you're guaranteed that there is not going to be a subsidy by the government, that there's not going to be any kind of bailout, any extra money, any subsidy that's going to come from the government from that train, and the train is capped at costing $50, why would you invest your money, right? There is no incentive for a private lender to come in or a private investor to come in and help out the build out of that train. So that the $10 billion that were promised by private industry never materialized. Same thing with the federal government. The federal government committed some money at the beginning, but then once they saw that there was not enough money to build out the whole thing, they also pulled their funding, right? So I can keep on going on this example, Collins, right? But I just want to give you a little bit of a taste of how the incentives were not aligned, and you got the wrong behavior because the incentives were not aligned with what people were looking for.
Absolutely brilliant, Alberto. And yeah, you hit some really important points there. Incentives do drive behavior. And if incentives explain why markets behave the way they do and why governments sometimes struggle to deliver results, then decentralized systems deserve the same scrutiny. Web3 often promises that removing central authorities automatically creates better outcomes. But changing the architecture doesn't necessarily change human behavior. So, Alberto, in your opinion or perspective, do you believe decentralized systems genuinely solve some of the structural problems you've described throughout this conversation, or do they simply recreate the same incentives in a different technological environment?
Yeah. Not necessarily, right? Like, not just the fact that it's a decentralized system, but they do bring in different mechanisms, right? Like the system behaves differently when it's decentralized, right? And whenever I hear the word decentralized, the first thing that pops into my head is Bitcoin, right? Bitcoin is the prototypical example of a decentralized network, decentralized system, and it does work beautifully, right? You could have something where it's decentralized and it's a little bit of like too much chaos, right? So, for example, anarchy is an example of a decentralized system, right? So that's a little bit too much on the other direction. So it needs to be decentralized, but with some guardrails, with some rules that govern the system, right? So one of the things another example of a great decentralized system is capitalism, right? So somehow, there is no authority that sets prices. There is no authority that decides what's going to get manufactured. But in a beautiful kind of way, capitalism determines what price is, right? Like producers, when prices start rising in a capitalistic system, producers jump in and start making more. That drives down prices. When prices start going down, people buy more of those things, right? So that drives demand because now prices are cheaper. Like you have more of what you're trying to create, right? So it could be screws, it could be cows, it could be houses, whatever it is. Somehow magically capitalism in a decentralized manner creates these products out of the blue, right? So that's two examples of decentralized systems that actually do work beautifully, but not having a decentralized system just by itself is not necessarily sufficient to solve the issue.
Interesting. And Alberto, listening to this conversation, it's striking how we've come back to the same conclusion from completely different directions. AI does not eliminate the need for judgment. Bitcoin does not eliminate human emotion. And better technology does not automatically produce better institutions. So ultimately, understanding incentives may be a far greater advantage than understanding any individual technology. And I believe that's one very important key takeaway in this conversation today. Alberto, this has been an incredible session, absolutely grounded in Bitcoin and how it's in Bitcoin and decentralized systems. And before we wrap up the episode, do you have any final notes for our listeners?
Yeah, one thing that I love saying at the end, Collins, always, right, is I've been able to achieve a lot throughout my life, right? And I have come to the conclusion that creating things, having great accomplishments, doing great things is actually fairly easy, right? Like this is the formula that I have followed throughout my journey, throughout my career. It doesn't matter if it's been working on AI systems or creating a real estate portfolio or buying Bitcoin or whatever it is, right? The formula is very simple. Find 2 steps. Step number 1, find someone that has done what you are trying to do, right? If you're trying to buy 30 houses, find somebody that has bought 30 houses and emulate and get their advice and do everything that they're doing, follow their advice, and so forth. Right? Like that's step number one. Step number two, just as important as step number one, is actually like a negation step. Right? Step number two is do not listen to anybody that has not done what you're trying to achieve. Right? How many times has your mother talked you out of doing something because she thinks it's too risky? How many times have your friends said, don't go into that business, it's going to take too much money, right? So, but they haven't done it, right? So how would they know how risky it is? How would they know how difficult it is? How would they know how to achieve it, right? So yeah, step one, listen to somebody that has done it before. And step two, ignore all the advice from people that have not done it. That's my takeaway, Collins.
Absolutely incredible. Step one, to always listen to advice from people who have done it, and basically they're just like contradicting themselves. Yeah, on opposite sides of the same coin. Step two is do not take advice from people who have not been in those shoes. And yeah, thank you so much, Alberto. This was really, really interesting. And I think one thing we can take away from this whole conversation is that emerging technologies are often presented as if they'll fundamentally change human behavior. But in reality, they usually reveal it. And today's conversation reminds us that Bitcoin and decentralized systems are powerful tools, but their success ultimately depends on the incentives that they create and the decisions people make within them. So here's a big thank you to Alberto Artasanchez for this conversation, for joining us on Web3 Unfiltered, and for sharing insights drawn from decades of experience across technology, finance, and entrepreneurship. So if you'd like to explore Alberto's books on AI, on investing and complex systems, you'll find the relevant links in the show notes. Until next time, stay sharp, stay curious, and keep building.